That's why we always place stop losses during our entry, in case the trade goes against us. Now let's look at another example. Here we have the XRP crypto chart on the 15-minute time frame. First, we check the last two crossovers that formed, this one and this one. This first one is a downwards crossover, meaning we would have entered a short trade, and eventually, price dropped significantly. But if we look at our original entry, you'll notice that the price did went up briefly before the actual drop happened. However, it never actually broke past this resistance. So even though price briefly moved in the opposite direction, it wasn't enough to invalidate the setup. That means we can still count this as a successful crossover. Now looking at the second signal, it was an upwards crossover, so we would have entered long, and eventually price rallied higher, so this counts as a successful crossover. Now, since both of the last two crossovers were a success, we can confidently trade the next signal, and right here, we get a downwards crossover, so we enter a short trade. For our stop loss, place it at an ideal level. In this case, there's a nearby resistance level that we can use as our stop loss placement. For the take profit target, set it at 2 times the size of our stock loss.